First off, in order to better follow along with this video, I'd like to suggest that you watch this video in full screen mode, as the text of the document is relatively small and full screen mode makes the document easier to read. The Truth in Lending Statement is a standardized form provided by the lender that outlines key information on mortgage costs and features. A borrower can use the Truth in Lending Statement to compare mortgage proposals from multiple lenders and to understand the upfront and total costs over the life of the mortgage. The Truth in Lending Statement is a standard document that is the same for all lenders. By law, a lender is required to provide a Truth in Lending Statement when the borrower submits a loan application. It's important to note that just because you apply for a mortgage and receive a Truth in Lending Statement from a lender does not mean you are obligated to select that lender. In fact, it's a good idea to gather mortgage proposals and Truth in Lending Statements from 3 to 4 lenders and then select the lender that offers the best terms. I'm going to walk through an example Truth in Lending Statement for a home purchase mortgage. In this example, we're looking at a $380,000 30-year fixed-rate mortgage with an interest rate of 4.250%. The first item on the Truth in Lending Statement is annual percentage rate, or APR. The APR is relatively complicated to calculate, but in short represents what the interest rate would be if it included lender fees. The APR provides another way for you to review and compare lender fees. If your loan has no lender costs, points, or fees, the APR will equal the mortgage interest rate. If the APR is close to your interest rate, then you know that the closing costs for your mortgage are relatively small. If the APR is significantly higher than your interest rate, then you know that the closing costs are relatively high and you may want to negotiate lower fees or look for a different lender. Additionally, if you have proposals from 2 lenders that are offering the same interest rate and points, but one APR is higher than the other, then you know the lender with the higher APR is charging higher lender fees. In this example, our APR of 4.339% is relatively close to our interest rate of 4.250%, so we can determine that the lender costs are relatively small. The next item is finance charge, which shows total scheduled interest payments over the term of the mortgage plus non-recurring lender costs. So this figure represents how much you will pay the lender in interest expense and fees if you make your regularly scheduled mortgage payments. It's a lot of money. Next, we have the amount financed, which can be a little confusing. This figure represents our $380,000 mortgage amount minus the non-recurring lender fees. So basically, this is your mortgage amount minus the fees you pay the lender up front. So in this case, we have approximately $4,700 in lender fees, which we subtract from the mortgage amount to calculate this figure. Next, we have the total of all payments. This figure is the sum of your scheduled mortgage payments over the life of the loan. So this figure includes both interest and the principal amount of your mortgage, which you pay back over time. In this case, our monthly mortgage payment is approximately $1,870. We are scheduled to make 12 payments a year for 30 years, so 360 total payments. So 360 times 1,870 equals approximately $673,000. Next, we have the interest rate and payment summary, which shows the interest rate, monthly mortgage payment, estimated monthly property taxes, and homeowners insurance expense, as well as total monthly payment. So this figure represents your total monthly housing expense and is also known as your principal, interest, taxes, and insurance, or PITI for short. Please note that property tax and homeowners insurance expense vary by county and property, so this is an estimated figure. Additionally, you typically pay your property tax twice a year and your homeowner's insurance premium once a year, but the Truth in Lending form shows these estimated costs on a monthly basis. Depending on your mortgage size and program, however, you may be required to pay property tax and homeowner's insurance, in addition to other mortgage-related fees, into an escrow or impound account every month along with your mortgage payment. The bottom of page 1 summarizes the key features of the mortgage. The first box indicates if your loan has a demand feature. If your loan has a demand feature, which is more commonly referred to as a balloon payment, you are required to pay off the balance of your mortgage at the end of the term of the loan, as opposed to paying down the loan every month when you make your mortgage payment. The next box indicates if your loan has a variable feature. If your loan has a variable feature, it means that your interest rate could change over the life of the loan. An adjustable rate mortgage, also known as an ARM, has a variable feature, as the interest rate will very likely fluctuate over the course of the mortgage. If your loan has a variable feature, the lender is required to provide additional information that estimates your projected monthly mortgage payment at potential future interest rates. The next item is security. This is the collateral for your loan. So in the event that you cannot repay your loan, the lender receives this property. In this example, the security is the property we are buying. Next, we have filing fees, which are the local government fees to document and record your mortgage. Then we have the late charge, which outlines the penalty you will have to pay if your mortgage payment is late. In this case, the penalty is 6% of our monthly payment. And the last item on the first page is prepayment penalty. Some mortgages require the borrower to pay a penalty if you repay the loan in full prior to a specified term. So if you have a 30-year mortgage and decide to pay it off in year 7, you should try to avoid prepayment penalties, and in this case, our mortgage does not have a prepayment penalty. I'm going to move to page 2 now. At the top of page 2, the form indicates if you have decided to purchase credit life insurance, credit disability insurance, or both. Credit life insurance pays off your mortgage in the unfortunate event that you pass away, and credit disability insurance pays off your mortgage in the unfortunate event that you become disabled. Credit life and credit disability insurance are not required to obtain a mortgage, and most borrowers do not purchase them, so we have left this section blank in our example. The next section, titled Insurance, shows the insurance policies that you are required to purchase to obtain your mortgage. In most cases, you are only required to purchase property insurance, also known as homeowners insurance or hazard insurance. The borrower can choose the insurance company and policy as long as the policy meets the lender's requirements. In this case, we are buying a 1-year property insurance policy for $480. The final item on the Truth in Lending form is called Assumption, which indicates if you can transfer your mortgage to another party if someone buys your property, so that that person assumes the remainder of your mortgage. Most mortgages are not assumable or transferable, so we have checked the box that indicates that someone buying our property may not assume our mortgage. Finally, I want to highlight the message at the bottom of the form that reads you are not required to complete this agreement merely because you have received these disclosures or signed a loan application. This means just because you have submitted a loan application and received a truth in lending statement from a lender does not mean that you are required to use that lender for your mortgage. Remember to shop around, compare lenders and proposals, and select the mortgage that is right for you. We encourage you to review related freeandclear.com videos, such as our Good Faith Estimate and HUD-1 overviews, as well as the Home Purchase Mortgage Process Guide on freeandclear.com. Thank you for reviewing the Truth in Lending Statement overview with freeandclear.com. freeandclear.com.